morning. Welcome to the SEPS ACRI webinar on instant payments. My name is Ina Olinik, and I will be moderating today's webinar. So instant payments is a highly topical issue as the Commission has stepped up its efforts to promote and create an integrated payment system, European Payments Initiative. Supported by the Commission, the European Central Bank, and various other European banks, the EPI has designed an EU-wide system to support real-time, or in other words, instant payments. We'll discuss the developments concerning instant payments with an excellent panel of speakers who will provide different perspectives on this topic. So today we're joined by Audrius Prankevicius from the European Commission, Paul Tamala from FinAstra, Ali Beruti from American Express, and Olivia Daneker from McKinsey & Co. So today's webinar will start with the intervention from each one of our speakers and will be followed up with a Q&A session. Please use the Q&A button at the bottom of your Zoom screen to submit your questions to our speakers. We'll start our discussion with Audrius Prankevicius, who's covering retail payment strategy at the European Commission. Audrius, could you please tell us more about the interventions that the European Commission is taking to promote instant payments?
Thank you, Ina, and good morning to everyone. My name is Audrius Prankevicius. I work for DG FISMA at the European Commission as a policy officer. I work on the instant payments file in particular, and I'm very glad to have this opportunity to present the work that Commission is conducting currently on instant payments. I will start by saying that with the value of some 200 trillion euro, payments play a very important role for the smooth and stable functioning of the EU economy. And currently payments are undergoing digital transformation through which the most exciting innovations in technology enter the field of financial services. Now, the COVID-19 pandemic also contributed to the very significant increase in demand for digital and cashless payments. And in this broader context, what we see that there are very exciting, innovative payment solutions that exist in national markets where they are often very successful. However, they do not work cross-border. And currently in the EU, we do not have a single European payment solution that EU citizens can use, let's say, to make payments in shops across the member states. And therefore, in view of this context, in September of last year, the Commission adopted its retail payment strategy for the EU, where it identified the need to enable the EU citizens and businesses to have at their disposal a variety of homegrown, innovative and secure payment means for payments to be made across the EU. And importantly, in this context, it should be said that this objective is very relevant for the EU's economic and financial autonomy. Now, the objectives of the European Commission retail payment strategy are very well aligned with the retail payment strategy, which has recently been issued by the European Central Bank. And the two institutions are working very closely towards achieving those objectives. Now, instant payments are at the center of the retail payment strategy of the Commission, and this is primarily due to the underlying technology of the instant payments, which first of all allows for the instant transfer of funds from the account of the payer to the account of the beneficiary. And this speed of transfer comes with the additional bonus of instantaneous availability around the clock of those transferred funds 24/7, all days of the year, including weekends and holidays. So these features respond very well to the fundamental expectation of the EU citizen to have really convenient payment means at his disposal, the payment means that would provide for truly instant experience. Now, going beyond the online banking setting for making credit transfers, obviously when instant credit transfers are combined with features such as e-invoices, mobile phone applications, standardized messages requesting a payment, they become very useful payment means in a number of daily life situations, in a number of use cases, where they could be used to make payments, let's say for invoices, to make corporate payments, and also very importantly, to make payments at POI, which include the P2P payments and also payments in e-commerce or in physical shops. And due to the establishment, or thanks to the establishment of the SCT scheme by the industry in 2017, and the also continuously improving clearing and settlement of instant payments, which is also another area where ECB is playing a very important role. And nowadays, a payment user in any member state, in theory, could make an instant credit transfer to a beneficiary in another member state. Now, that's the theory. In practice, the uptake of instant payments, as you have noted as well in the introductory material, is unsatisfactory. It's instant credit transfers in euro currently comprise only 7.9% of all credit transfers in euro. There are reasons for that. There are obstacles both on the supply side and the demand side. Demand side is also rather nascent. And I can tell you a little bit more about those major obstacles that we are investigating at my later interventions, if necessary. At this stage, I would just say that we at the Commission, in our analytical work, we are looking at those obstacles. We're also looking at the enabling measures that would be effective in addressing them. And also being the guardian of the internal market and financial services, we pay a very close attention to the instant credit transfer provision and use in the cross-border setting. Now, in our work, we also currently conduct a very extensive consultation campaign. We just finished a targeted consultation with PSPs about a week ago. And we currently are still running our open public consultation with all the stakeholders. And therefore, I would take this opportunity to invite the audience of this webinar as well to respond to our consultation if they haven't done so. It's, as I said, it's open until 23rd of June, and it's available on the Have Your Say portal of the European Commission. And maybe just to conclude, I would like to reiterate that instant payments have the right intrinsic features, and the main building blocks are there or are under the development. And we hope that by leveraging on the pan-European infrastructure rules and also the technological solutions, instant payments can become the long-awaited answer to the truly pan-European and cross-border payment means for the EU citizen. Thank you.
Thank you very much, Audrius. Very interesting, and we will come back more to the take-up rate of the instant payments a bit later after the first interventions. Now moving up to Paul Tamala. Paul, as an enabler of payment services, how do you view the developments in instant payments?
Well, it's something I've been working on since 2008 here in the UK, where I'm physically based. But you know, our software runs the largest number of immediate payment transactions in the whole of Europe. So we have quite a bit of expertise in and around Europe, as well as in the US and other parts of the world. But what we're seeing is frankly just the ecosystem of hundreds of fintechs wanting to come and be part of the payments world. But it's a crowded market, And the crowded market that we see is effectively whether it's a check, whether it's a card, or it's a high value payment, or it's an ACH payment, or it's a cross-border payment. And of course we could go on because there are others. But let's remember the first check was written in 1659. We still support checks. We still support checks. Let's just soak that in, you know. Cards, first card in Europe, I think, was issued in 1966. So these things have been around a long time. And I think one of the things that we have to get our minds around is at their time, they were the most exciting things to happen. When Swift came about, it was super exciting. High value payments came out, they were super exciting. But actually, that was such a long time ago. And at the time, they were the best in breed. The problem is they're all analog. Every single one of those payment methodologies is analog. And guess what? They have their own costs. 3%, 0.02 of a euro. You know, it depends which one you actually choose. People don't know how much they cost because that's never very clear. But each of them have a different time. So is it really instant? Or is it 45 days? Or with the check, is it sometime soon? You know, so we have all these different methodologies. They all have their own rules. They all have their own governance structure. Sometimes not even inside of the country, which I'm sure we'll talk about later on. They all have their own protocols, and they all have their own business models. And the business model, therefore, at some level, aggregate against each other. And if you're really into cards, you want to move cards up. If you're really into cross-border, you're going to move Swift up. That's not really what we're actually trying to do here. So we have all these business models, but guess what? They all need maintenance. Several times a year, they get tweaked. And 85% of the R&D budgets in payments go just to making do and mend, and making some of that software that's been around since, you know, the 40s and earlier, just making it stay alive. That's no way to be thinking about it. So we talk about immediate payments, and it isn't though it's 3 seconds, 5 seconds, 15 seconds, 35 seconds. That's not the point. The point is, it is about going from an analog world to a digital world. When everything's analog and it's all locked into a process, there's very little that you can do to break into those processes. So what you need to do, I think, is move to the digital world that everyone wants to go to, which allows a different set of rules, a different set of partner enablement, and a whole bunch of services that can be added on top, rather than the underpinning of it. So the underpinning of immediate payments it's just a process. It's just a mechanism. What you put on top of the process, whether it's an insurance process, whether it's storing of data for your client, whatever it is, that goes on top. But that's a different process to the underlying process of the settlement and clearing of an immediate payment. So it is really about moving from an analog world to a digital world. And everything that's been designed so far, apart from immediate real-time payments, whatever we want to call it, has been analog, and this is the only one. And maybe we should just stop supporting so many of the other ones and move forward, because if we don't take something off the list, all you're doing is adding to the list of maintenance, and that's a big issue for the industry. The other way of looking at this is, nobody wakes up in the morning. Well, maybe a few of the people on the panel may, but nobody here really wakes up and goes, today I want to make a payment. They don't. You may want to buy a cup of coffee, you may want to pay the vendors, you want to buy a house, and it's on my mind right now. But it's not the payment that I want to do. It's what I get for it. And at the end of the day, a payment is just an exchange of value for a good or a service. What comes on top of it may be valuable, and genuinely is valuable, but we miss both things. So we actually bundle them all together. Actually, the underpinning of immediate payments is a simple utility. What you layer on top of it and what it enables you to do is valuable, but we shouldn't get the two mixed up. So I think that when we sort of try and move forward, we have to think about, is it a transportation mechanism we're trying to put in place? And I would believe that it is. And on top of that, a set of services. Are we actually transparent about what the costs are? Is this transaction going to cost me 3% of the actual transaction? Is it 0.02 of a euro cent? Is it going to be there in 3 days? Is it going to be there now? Why would I make any of those decisions? So I think we need to try and think about transparency, the time it takes, and the costs that are associated with it. And my point of view would be then, we have too many rails. We need to stop. We need to, if we're going to add one, which we are, and we need to take some of these away, because at the end of the day, they all do the same thing. Opaque rules, times, values, that's not going to help anybody move forward. But it needs to be a ubiquitous play across the whole of our region so that I can go from end to end. Everybody has access to it. And I think we really got to think about what's the business model associated with this versus the business models that are associated with all the historical mechanisms that we've had going back to 1659, and how we do go to the digital world and stop all this analog nonsense.
Thank you very much, Paul. If you have a question to Paul, Audrey's, or other of our speakers, then please use the Q&A tab in the bottom of your Zoom window to submit your question. And now we're going to move to Ali Beiruti, representing American Express. So, Ali, representing a third-party scheme, how do you view the developments about the instant payments in the EU?
Thank you very much first for the invitation, and also for being on such an esteemed panel with the other speakers. This topic is very important, and it's really interesting that we're discussing it right now. I think the two previous speakers, Audrey and Paul, have already covered a lot of room. So I'll try in my intervention maybe to add a new perspective, and I'll be thinking about instant payments and thinking about also EPI, which is maybe the elephant in the room, more from a competitive perspective. Yeah. Why am I saying this? Because I believe that the creation of a European scheme is a key opportunity actually for policymakers to provide consumers, businesses, merchants, and payment service providers with more choice, increased competition, and innovation in the payment space. Why this is important? Why am I focusing on these aspects? Because we do believe here at American Express that with more competition comes better services and better prices. And these are points, I think that Paul was also mentioning, in terms of costs and in terms of transparency. So we believe actually that efforts that EPI should be focusing on encouraging the real competition, to the dominant schemes in the cards market. So whether this comes from fintechs, European-led initiatives, or alternative models such as American Express or Diners Club International. We believe that more competition is really needed in this market, but in order actually to have EPI as a success or any other solution that is based on instant payments, we believe there are three key areas that need to be addressed. So then you could really guarantee that there would be success for this initiative. First, it's true global interoperability. So what do I mean by this? In a world where consumers want to shop globally, and that's also a point that Paul has mentioned, consumers want to shop, they want to buy goods and services. So any domestic or regional solution must be able to meet their needs by offering not just speed and reliability, but also true global interoperability. This means if you want to also be using this solution outside the EU, if we're thinking, let's say, about EPI, you need this to function. You need, as a consumer, when you are moving from France to the US or to Australia or to another country, to be able to use also that means of payment, to be able to buy your good or service. So this is the first point. The second one is you need a regulatory framework that would ensure that proper economic incentives are guaranteed. We're thinking about a new scheme that is out there. in order to have an optimal functioning of any market, you do need, to promote the creation of value. And participants in API, for instance, must be expected to obtain enough compensation for the services they are providing. So this is also, in terms of cost, probably something also to think about from that perspective. And last but not least, any new solution, whether it is called API or any other name, it needs to be providing at least the same level of security, convenience, and speed when you compare it, to currently the card solutions and card payments. If not, it will fail to get the consumer support and traction, which are needed, in order to have any new solution becoming a success. So I really do believe here that we have a chance, that, we have the political support. I mean, it's very clear that the Commission, the European Central Bank, a lot of national governments are focusing on this area. And I think this is helpful in order to be able to build this European scheme. But again, you need to think about competition and innovation, I would say, in a bigger sense. And it's important, to look how to make this particular aspect work. But let's not forget, that you need to think about the whole ecosystem. I'll give you a practical example here. In the payments world, the two maybe most important initiatives in the recent past were the interchange fee regulation and the payment services directive number 2, PSD2. And the effort of the IFR and PSD2 were to deliver a level playing field, which is a very good objective. But this has morphed into an effort to develop a one-size-fits-all regulation. And we've seen it, at least in PSD2, in some aspects that concern what we call the open access and separation rules. So a lot of maybe people, but specialists in this webinar won't be familiar with PSD2, because when you think PSD2, you think first about, the new competition by the GPPs and so on. But there were some aspects in PSD2 called like the open access and separation rules that actually made it so difficult for any new player to come and compete, for instance, in the cards market, because you had somehow to develop a model that is exactly similar to what Visa and MasterCard have in Europe, which made it extremely hard to do for any new player. And so instead of getting more competition, we ended up with less competition, because again, to give you another practical example, as American Express, we were present in 16 actually EU countries before these rules, and then we had to exit them. We have to exit 16 markets out of all the markets we were present in Europe, and that's because of these rules, which ended up with 7 million cards less in the market. And guess who was able to take these clients? So less competition, less choice for consumers in the EU. So I'm just giving that example, just as to always remember when new rules are developed. And here I think it's a great opportunity, as I said, to have either EPI or any other solution based on instant payments. Let's think about what the end result could be. Let's think about always competition. Let's think about the choice that could be provided to consumers. And then we can all benefit from a new payment solution that consumers, merchants can use, and that would be positive for everyone. Thank you very much.
Thank you very much, Ali. Before we move to the Q&A session to discuss exactly why the instant payments have been so far less than 1/10 of all credit transfers in the EU, we'd like to actually hear from Olivier Denneker from McKinsey & Co. Olivier, you have been following the retail payments market quite closely. What is your view on the EU initiative and ambition to develop an integrated market system for instant payments?
Thanks, Ina. And maybe I'll start with actually taking a step back and seeing what is the importance of payments in the financial services industry. I mean, if you define payments as what people actually buy, which is the ability to store and move money around for purchases and value transfers, meaning that's the accounts, that's the interest on accounts, and that's the transactions. You actually have a fairly sizable business, which is about a third of banking, which basically has been growing at healthy rates globally, and even also in the EU, even through the crisis, I'd like to say a 6-7% revenue growth. Of course, COVID has created a bit of a twist. COVID is a bit of a tale of two cities, where on one hand, especially in the beginning of the lockdowns, payments has showed itself a real-time industry, because the moment you shut down shops, you shut down payments. So a lot of businesses actually showed quickly the drop in discretionary spend, but of course that also reopens as soon as the business starts again. On the other hand, there's been a couple of other aspects, meaning some profitable and very important areas of payments, as Ellie will definitely also confirm, like travel or like trade, have been fundamentally affected and are not back up. So that was one of the fuels of change also in the payment industry. But finally, the net interest margin collapsed, and net interest margins have been the fuel of payment innovation and the fuel of funding for payments for a long time. Net interest margins have collapsed big time, and that has definitely drilled the hole in the payment business per se. On the other hand, there's good news. The COVID crisis has actually accelerated digitalization. Cash usage has been drawn back very, very substantially, and all the signs are that this will not bounce back, at least not completely, partially. There's been an accelerated shift to digital channels. I mean, in the US, we see that for the first time, online card usage is higher than POS card usage. Now, this might come back after the crisis again, but still. But then also the new solutions driven on, amongst others, by instant payments have been actually taking off. Now, mind you, but as Paul said, it takes time to make these things grow, but at least COVID has created an impetus to get this started quite quickly, not so much as an instant payment infrastructure, but through all the instruments that have been built using instant payments. By the way, also cards, wallets, billing solutions, etc. Now, if you say that this is a good start, who will now drive the further growth of this business? And historically, regulators and the market in general has looked at the major providers of payment systems in Europe, which have been the banks. Now, if you look at banks and payments, you see that specialists have been benefiting fantastically from the payments growth. They're by now the most valued companies in this space. I mean, I saw that it's now, I think Adyen is now the second largest bank in terms of market valuation in the Eurozone. And Visa is the largest financial company, bar none, 20% bigger than JP Morgan. At the same time, many of the specialists that we see don't have an EU base or an EU home ground. If you look at the incumbents part, especially the banks, their story is a bit different. Their net interest margins have basically dropped, and these have been massive revenue bleeds. At the same time, interchange, which was the other big revenue driver in European payments, has of course been curtailed by the recent regulation, and the competition that happens on certain of the more lucrative parts, like international payments, definitely been attacked by some specialists. I mean, like Revolut and others. At the same time, as Paul highlighted, investments for the banks keep growing up. They're paying for the instant payment rollout. They're paying heavy fines, but also heavy development costs for compliance changes and increased compliance. And they need to adjust to the new rules and the new needs for customers. But as Paul rightfully assessed, they need to spend 80 to 85% of their budgets on keeping the systems running and not changing the systems, which is something that, of course, the specialists can do much better. So if you then see how this would come together, I think instant payment is a fantastic set of rails, and it's equivalent to cards. It's not a full replacement, it's an equivalent. It will be used for certain systems, but there is a number of things missing. I think that one of the elements that both Paul and Eli already mentioned is an economic model actually is missing. How will anybody make money? And honestly, without having people making money on payments, we will not have European champions in the payment space. There's an element that you can see this as a utility, but if it's a utility, it will be, you know, the traditional mail type of equivalent and not an innovative business per se. Secondly, overlay services are needed. It's not, I mean, guys that's sitting in Walmart or or Asda or Tesco's, the teller is not going to watch until basically the payment arrives on the bank account. He's going to need somebody to tell him when the payment has been executed, when the payment arrives. So you need overlay services that actually allow for acceptance to work. And at the same time, you also need a level playing field, because as we said, some people are paying for the system, some others are using it. So somehow paying for the infrastructure is something that should be considered, especially as to change over from a batch to a real-time system, from analog to digital, as Paul said, doesn't come for free. And this is true for banks, by the way, also true for corporates. Many corporate treasurers that I know are horrified by the idea that if they make a payment in the morning, the money goes out of their account instantly, because they're actually spending the day to get the funds together to make the bill. So actually a lot of changes has to happen. Changes also for the regulators, honestly. Real-time compliance is not an easy thing. If you want to monitor banks and you have a day to do that, that's fine. If you do need to do that real time, that's a different story. Also, in terms of chargeback, in terms of protecting the customer. When the money's gone in instant payments, and how can you get it back? There is no regulatory framework yet to actually grab your money back from the other side of Europe if payment has basically been abused. And then the thing is interoperability. I think, Andreas, you said that many local innovations work. Now we have one SET Inst solution. However, I've heard banking community say we can do SET Inst as long as it's domestically initiated. The moment it comes from another European country, the differences are too big and we can't actually handle it real time. We need to do it in batch. So the whole interoperability story is not done. Then to maybe close the argument, instant payment doesn't work in isolation. There is many other initiatives that again also will cost money. There is digital ID, which is a growth area for sure, but also requires adaptations. There is CBDC that is on the horizon, and CBDC combined with open and instant creates a completely changed ecosystem for banks to actually operate in, where some people ask the question like, will we still need banks if we have digital central bank currencies and instant to do that? There is also a number of global initiatives. I mean, the Financial Stability Board has kind of initiated the reflection on, do we need a global single payment area instead of a SEPA, like globally, and having seamless payments across all countries, regardless of currency regimes, etc. And then Paul has a fantastic point. You need to sunset systems as well. Do we allow checks to be stopped? Do we allow batch systems to be stopped? Do we allow cash to be phased out? Can banks decide to stop offering cash services to their customers because they need to have money to do instant payments? So there is a number of these things that come up, and I think that those are the building blocks that need to be addressed as we grow this new system.
Thank you very much, Olivier. So now it's time to move to the questions, and I guess we can discuss all of those aspects. We already have received several questions prior to the webinar, which I think is a good indication of the topicality of the issue. So one of the questions was from BaFin, Christoph Schlecht, I think to the European Commission. In particular, are there sufficient mechanisms to reduce the danger of an instant payment-driven bank run? What does instant payment mean for the legendary weekend, which supervisors had to save the bank if payments are instant and happen 24/7?
Okay, well, thank you for that question. Of course, the question has been raised by various stakeholders in the context of the work that we are conducting. Is actually, if I remember correctly, it's one of the questions included in our public consultation, on which we are also soliciting inputs from all stakeholders. And it's true that some regulators out there do think that due to this intrinsic feature of instant payments, the speed of the transfer, the instant payments, especially, I guess, talking about the future when they would be adopted in higher volumes, maybe at the current level of uptake, the risk is not there yet. But indeed, if we are successful with the promotion of instant payments in the EU, and we achieve higher percentages of instant credit transfers, the question becomes quite valid, I would say, whether existence of instant payments can exacerbate bank runs. Now, I have to say that I happen to have worked in the past in the bank crisis management area. And we just, in the EU, we just, we recently adopted a revised bank crisis management framework, where one of the measures that was widely debated by the policymakers is the power of stay on the transfer obligations, payment commitments by the banks, to be able to what was considered was to give competent authorities a power to intervene at an earlier stage before bank enters the phase of resolution, to put the stay on the payment commitments. And that was, there were different views there, I would say, at the time, because there was also the view that, let's say, if competent authorities intervene early with a state power, that could also in itself create a certain reaction on behalf of market participants. And while this situation could be stabilized for the time being, but that might also eventually lead to a bank being placed in a resolution. So I think the bottom line is that where we ended up with the revised crisis management framework in the EU, that those state powers could be applied, but only under certain conditions. Member states, the competent authorities in member states can have still their own national power. So let's say, if member states deem that they want to have the powers at an early point in time to stabilize the situation in bank, they could have it under the national law. Now, of course, this is where the situation was kind of in the instant payment world. Instant payments now have the potential to change the perception of the competent authorities and the regulators. We are in the context of consulting with the competent authorities and the finance ministries of member states, and we will take stock of their views and consider whether some further measures or powers on behalf of the competent authorities would be appropriate.
Thank you very much, Adrius. Before we move to the next question, I would like to also invite and encourage all of you to submit your questions in the Q&A tab. So again, it's in the bottom of your Zoom screen. We're looking forward to that. Next question is to Paul. So Paul, Finastra supports all sorts of payment processing solutions. From your experience, is there a really large difference between providing traditional electronic payments and instant payments? Are instant payments harder to implement, or are they more costly to implement?
Ironically, they're actually much easier. So implementing immediate payments, we can do it within 3 months. Now, I've been on projects that have taken 7 years. And the reason that they take on such a long period of time is a couple of things. One is typically financial institutions tend to require very specific internal requirements, more based on what they have done in the past rather than what they want to do in the future. And to keep those things going, they need to maintain the systems. And that maintenance project is generally far outweighing the actual core payment piece. So roughly a factor of about 10 to 1 is just the internal alignment within the financial institution rather than the payment rails. But immediate payments are relatively easy to implement. What is difficult to implement is culture. And if you speak to people on these sort of panels, what they'll say is, yeah, I'm inside of a bank. I'm used to having all of the chain of physical control inside of the bank. Now, PSD2 has changed that, but even still, I've got 3 days to sort that out. Don't worry about it. I've got 3 days. It's fine. That's not what happens with immediate payments. And then this digital interchange. How am I going to work with these fintechs? My customer now wants me to integrate to their corporate systems. Oh, right. Well, I can't do that on the old systems. It's really very difficult to do. So what you find is that the legacy systems tend to be very difficult to move and very sticky because the people who wrote them have, frankly, retired. And they're maintained by and large by SIs that are not based within the EU. they tend to be based by people wrapping them in cotton wool, hoping that they don't go down, quite frankly, in some cases. So immediate payments relatively easy to do. Culturally, it's very difficult for a bank to change from knowing that it was completely in control to being into a digital world and thinking that through, and what does that mean for their customers, whether that's a corporate or a citizen. So simple answer, relatively simple to do, but that's not the only piece of this. There's a lot more to it that goes behind the scenes as well.
Thank you very much, Paul. I see more and more questions in our tab, particularly focusing on the low take-up rate of instant payments. So we have Maria Isabel Mejamans and Carlo Di Giacomo asking the questions on what could be done to increase the take-up rate of instant payments, and why has it been so low for a moment. So I think this question is addressed to all of our speakers. If you'd like, I think maybe Audrey, you can start, and then we
give one perspective if you want.
Yes, absolutely.
Also, to continue a bit, I think the argument that I started when I said let's have something at least comparable to what card schemes are offering right now. I'll focus just on one aspect, which is the refund aspect. So right now, currently, if you're using your card and then you have been a victim of fraud, or you have got a problem, or you were not the one initiating that payment, that you have a right, for a refund. That you can, talk to your issuer, and then you could then get your money back. And this is definitely, I believe, a feature that consumers will like, that consumers, will consider as very important. So if there is one solution maybe to bring, I would personally, push for that one as a consumer.
So maybe if I would add is instant payments shouldn't be a goal per se. It's a rail. It is a technical solution. And honestly speaking, instancy is not a value per se. Sometimes making a payment instant is a really valuable. If you're standing in a shop and you want to walk out with your television set, the merchant wants to know whether he gets paid. He doesn't even want to be paid. He wants to know whether he will be paid. So that's a difference. So I think that there is an element, instant payments will take up as instant payment use cases develop. And this will be retail, corporate, SME, but the question is, why does it have to be instant? When does it need to be instant? Because maybe it doesn't have to be instant all the time. There is a second point, is that instant should grow in actually spaces where there is a need for a new solution. And I would argue, and maybe people in supermarkets, cards, and especially debit cards, credit cards as well, but cards work perfectly well. There is actually very little element to retrain your staff to just take another payment solution that does exactly the same. There's no need. Internet, online payments, there is a different argument, because online payments, you could argue that basically use cases or user journeys of cards could be improved. And in many countries, actually, the online and instant solutions have actually worked quite well. The question is, what are those? And then the third dimension is, nobody, merchants, nor banks, nor consumers, value multiplication of payment systems. I mean, as Paul said, if I'm a merchant, I don't want to have 5 different payment solutions at my I want to have one that is cheap and works all the time. And I definitely want to have a backup. And for the rest, I want whatever my customers want to use. But I don't get excited if somebody comes like, hey, we have an instant payment solution. Can you implement it? So the element is where do you want to launch this? And then which systems are you going to disconnect? Again, if you tell me that we're going to stop all batch payments by 2025, instant payments will rise. I mean, that's what happened in Denmark when they launched their Strux clearing. They said, we're going to disconnect in the near future the batch payment system. 66% in a matter of 2 years was actually on instant, logically. It's a bit like shifting over to green energy. It's as long as you think you can actually fuel up with diesel, you'll keep doing that. The moment you say diesel will disappear, people will start investing in electric.
I think there's a couple of things. One is that immediate payments aren't currently ubiquitous. Okay, so that is a problem. Who can I send it to? Which banks support it? Which banks don't support it? I think that's one aspect. And once that goes, you basically have the core plumbing in place. Then you have a series of, let's say, applications that come on top. confirmation of payee. Am I actually going to send this to Ellie? Is it, is that guaranteed? Yes, because it's come up and said it's definitely Ellie because I put those numbers in. That's then a key piece of this. And I think from the more retail side of it, request to pay will probably transcend the card use case in the sense that to a degree, Olivier's right, people don't want to change that. But if you just turn around and go, hey, right, then that's effectively what request to pay will actually deliver. It's a request for a push payment, and that's more likely, I suspect, how it will be physically delivered. In which case, I think it will be very convenient for people to do it, and I think the retail side of that will take off. But it's a bit like an iceberg. Unless you've got the ubiquitous immediate payment rails being accepted across all countries by all banks, and then you have a confirmation of payee layer on top, and then you have the use case that Olivier is talking about, which is, in my eyes, addressed by request to pay, then you really haven't got the plan. And at the same time, all of these things cost money and people need to do work, and they need to find that from somewhere. I think there needs to be a business model that actually supports that, because once you get there, there's a whole bunch of benefits that we could talk about that come from that type of model. But it does require other people to change and fund that and stop doing things. And we're not very good in payments at stopping doing things, quite frankly.
And just to provide with the Commission perspective on the low current uptake of the instant payments, as I mentioned earlier, for us the explanation is on both sides of the equation, so both the offering and the demand. And I would very much agree with what Paul just said, that first of all, to increase the uptake of instant credit transfers in the EU, we need to have the rails very well developed, and we still have a situation in the EU where in some member states there is not one PSP that let's say would provide instant credit transfers to its users. So as a result, on average in the EU, currently we have 65% of PSPs that provide instant credit transfer. So, ideally, we need that number to be higher. Now, of course, we hear PSP saying that, the reason for why they refrain from joining the instant credit transfer scheme is the business case, the strong business case, which was also referred in some of the interventions, and for that, a broad demand or possibilities to use instant payments in different life settings is very important. Now, from the demand side, of course, the key aspect is the consumer protection. What we are looking into through our consultations is how to address the risk of fraud or errors that, let's say, consumers may inadvertently make while executing instant credit transfer. And now, of course, due to the nature of instant credit transfers, because they are instantaneous, the consequences of making such mistakes are higher, more grave, if you will. But also, what we know is that in some national markets there are solutions in place which allow the payer to verify the IBAN of the beneficiary before executing the transfer. And we know that, let's say, for example, there is a very successful solution like that functioning in the Netherlands, and then there are also other member states where we know that such solutions exist. So we are looking into to what extent solutions like that, ex ante, let's say, solutions could be an answer to limit the risk of fraud and errors. Talking about the chargebacks, the possibility of chargebacks, which is obviously now a feature available with cards. We also know that, let's say, some of the national payment solutions do entail similar features. My understanding is that the Spanish solution, Bizum, has something similar to chargeback. I'm not sure if there are, let's say, any representatives from Bizum that are attending this seminar, this webinar. Maybe they could confirm it. But the instant payment solutions, my point there is that private solutions based on instant payments, they in some cases they already also involve protection measures similar to chargebacks offered by the card companies. Now, also just to touch upon some other areas that we are investigating or analyzing in the context of our work is the in a way alignment of the instant credit transfers or the execution of instant credit transfers in a matter of seconds with the obligations for sanction screening, which is, we hear quite a lot from PSPs that sanction screening obligations are easier for them in the context of regular credit transfers, where funds reach the beneficiary in 1 business day or longer, and therefore there is a hit on the person which is included in on the sanction list. The bank has a window of time to investigate the situation. But with instant credit transfers, where for instant credit transfer to be successful, funds need to reach the beneficiary in seconds. PSPs don't have such flexibility, and this is one area where the experience of instant payments could be impacted a little bit for the consumers as well. But then, of course, the objective from our side is just to see how best to and whether there are ways to provide for sanction screening for the instant payments, while also respecting the overarching obligation for all the economic actors to comply with the sanction screening regulations. And the other area we are looking in is the technical standardization, the QR codes, which currently vary quite a lot. And that's one of the reasons why the national solutions, which are successful across different member states, they do not work across the border. The crisis management area that we talked about earlier, the liquidity management by banks as well. It's also interesting to assess now with the kind of more with the speedier movement, inflows and outflows of funds, and with the potentially increased uptake of instant credit transfers in the future, how the PSPs will manage their liquidity, let's say in view of unexpected surge of instant credit transfer outflows, let's say. So that's another area on which we are consulting with PSPs. So yeah, that's from my side.
Thank you, Andreas. So what are the next steps the Commission will take after the consultation?
So we are in the process now of this consultation campaign, and we are conducting our internal cost and benefit analysis, and this type of work, this analytical decision support work is the customary approach of the European Commission. Accompanying any major policy decision. So I would say we are still at an early phase of our work. We did consult on our inception impact assessment earlier this year. And the inception impact assessment is in a way like a mini impact assessment with all the major problems and possible policy measures identified. And I have to say that from the feedback that we received, there was a very strong support from both the user community and the provider community to promote and to create the right environment for instant payments in the EU. And also, I would say a little bit surprising to us that there was also among those respondents there that expressed their view on the possible legislative path. Majority of them supported possible legislation. Of course, the ideas on what areas would merit regulatory intervention vary very widely. Let's say providers would prefer certain areas fixed via regulation while users the other. But going back to your question, we are still at the preliminary phase. The political decisions have not been taken. We will have more clarity as we go further into this year, and if there is a political decision by the hierarchy to support a legislative measure, I think that will probably happen sometime in the first half of next year. But that's to be seen.
Thank you very much, Audrius. As we're now moving to the wrap up of this webinar, I would like to give the last word to all of our speakers for their final interventions. Paul, Olivier, Ali, if you'd like to take the floor.
Okay, Olivier, go on.
No, you were first. Go for it.
I think that we're talking. We talk a lot about immediate payments, and I think one of the things we need to talk about is that we're really talking about a change of culture, and we literally are going from an analog world and everything that we've done to date to a digital world. But we're also saying that there needs to be a fit business model that allows the suppliers to orchestrate that to work. And I think the business model isn't quite there just yet. But it is, if you look at it from the time that I spent in 2008 in the UK to where we are now, you'd say it's going to take off. And if we look at that across the EU in 10 years' time, it would be my opinion that immediate payments would be by far away the most numerous of those transactions. What we need to do is to help ourselves get there a little bit quicker, and actually to work out, really, guys, what are we going to stop doing? We can't keep on maintaining some of these old systems. They will just collapse in the end. But I think it's a great opportunity for the whole of the region. I really do.
Yeah. And echoing that, I think instant payments is indeed a new, very enriching way of exchanging value between consumers, businesses, and merchants. However, I think they will coexist with cards for the foreseeable future because there are two situations and two solutions that have different purposes. Now, this means that if you want to create growth, it's important to actually focus on the right situations, in the situations where the current payment solutions are not sufficient or are not the best in class. And I think that then you will see take up. That's what we saw in the P2P world, where actually instant payments is working really well. The second piece I would want to say is, like, we have to be very mindful for the people that want to offer instant payments, how can complexity be reduced? And complexity can be reduced by sunsetting systems, but there is another element, is by not forcing a single player to have connections with multiple instant payment solutions, because again, every single member state has their own instant exchange, and typically banks get asked with insistence that they connect with the system of that country, regardless of where their home country is. That would reduce costs quite a lot. And I think that then thirdly, the element of overlay services and new products like request to pay, I think will be very important. The use cases and then the business model that goes with that will actually create growth.
Well, I agree with what Paul and Olivier have said. I'll just add one perspective, which is the political one. So we all know why European institutions, again, are behind, developing instant payments, or at least, make it easier to have new players using the rails and develop solutions there. That's more, the sovereignty aspect, which is also important for the EU, and we totally get that, I guess. But for me, like for business people, we don't look at it from I would say sovereignty perspective. It's rather like whether it makes sense, and that's the whole use case debate that we discussed this whole morning. And I think that's where the focus should be, as Olivier said. Then if this is working, well, then Audrey's and the Commission and what the European institutions want to achieve, it will be a success. But only tackling it just from the sovereignty aspect, I don't think it would make consumer just adopt it, because at the end of the day, it needs to make sense for them to switch from one solution or another. Or as Olivier was saying, and I agree with that, you will be using different means of payments depending on what you want to be doing, and depending on the use case, and depending again if you're shopping online, or it's at the POS, or you're an SME, etc., etc. So I think there is room for all these solutions to exist. Definitely, as Paul said, some solutions need maybe to be analyzed whether they make sense. Well, when we think about checks, I think this is one of the obvious ones that many EU countries already got rid of them. Is that something that the few others, well, few of the main ones out there are still using them, but does that make sense or not?
Thank you very much. Audrey's, any last message to our viewers?
Yes. So as a closing message from our side, just to reiterate, and I also agree with all the colleagues who intervened prior to me, that the conditions have to be created for the higher uptake of use of instant payments in the EU. We are working on that as the Commission. We call it enablers. So we are not forcing. We want to enable both the providers and the users to be ready to adopt instant payments in a more widespread manner. And also, in that spirit, I would also like to share that actually in 2 days from today, so on Thursday, we will be organizing a webinar at the Commission, which will discuss the potential of instant payments from the side of the users, the consumers, the merchants, and the corporates, and we will look at what are the opportunities from the user perspective, how they could be explored, how they could be utilized, and how the obstacles to that could be effectively addressed. So I invite also the members of this webinar to attend our Commission webinar on Thursday. It's at 10 o'clock. It's advertised on Twitter, and with that, we hope also as our other members of the panel is that we will have a pan-European cross-border solution based on instant payments. Thank you.
Thank you very much, Audrey, Paul, Olivier, Ali, for sharing your views during today's SEPS Acri webinar on instant payments. For more information on our activities in payments and also in finance in general, I recommend you to check the Acri website and also subscribe to our newsletter if you haven't done so yet. Thank you all very much for the participation, and I hope to welcome you again soon at our next webinar. Have a lovely day.
Thank you.